All right, Bulls and Bears, it's Monday, April 7th, 2025, Bulls and Bears. We have what some predicted would be a Black Monday. I'm recording this just after market open today, and we're going to probably do a lot more videos, more volume of videos because of what's happening right now. Everyone that's been on this channel, folks, you knew this day was going to come. You knew these days were going to come because we're seeing a multi-day sell-off. It should be no shock, no surprise to anybody. What I want to put out there is a word of caution and do not panic. Do not panic. Obviously, again, most of us here on this channel, people watching this channel, you're not panicking anyway because you knew this was going to come. Just look back at history, folks. Every time we've seen a market panic, a market sell-off, the market has went on to recover, sometimes weeks, sometimes months, sometimes years after the big drop, right? To go back to the Great Depressions, that slump took years to get out of. There are people out there that are saying, that are fearful that this is a Great Depression 2.0 scenario. I wouldn't go that far. Like, people have called me, a doom and gloomer, fearmonger. No, I'm not saying that at all. I'm saying that this is going to recover just like it has every other time in history. Now, again, there's always the fear that people think that this time is different. There's going to be no recovery. This is the end. This is the ultimate collapse. The collapse to end all collapses. That's the fear out there, right? And I've seen a lot of people get burned in many different downturns, right? Really didn't start following finance, economics until after the 2008 downturn, the financial crisis, if you will, the great financial crisis. And during that time, that's when I found out that that's the best time to make money, right? I entered the housing market in 2010. They're saying my home is worth almost 3 times what I paid for it now. A lot of people I knew did well during that time, right? People that I talked to and people that are thinkers like myself. And I think I like a lot of us here on this channel, similar, right? But there's still the fear out there, again, that this is going to be the end of the end. You know what I'm saying? There's going to be no recovery. Folks, these tariffs, they're going to blow over. Just like everything else. And I wouldn't be buying right now. All right, I'm not selling. Here's the thing I want to caution you on, and I'm not giving advice, right? If I was someone that was in the markets right now and I just saw my portfolio drop, and let's just go to a few indexes here. Let's go to indices. Let's go to the Dow Jones first of all here. We're down 11% year to date. Not the end of the world. If you go out to a 5-year chart, you're still up 55% even after this drop here. See what I'm saying? Same thing, S&P 500. If you're looking at a year-to-date chart, if you just got into the markets, you're down 16% year over year. 5-year chart, you're still up 75%. NASDAQ, year-to-date, this is one of the worst ones year-to-date, down 21%. 5-year chart, you're still up 85%. The point is, if you panic and sell after the market drops, right, you've basically written in the loss, right? You've secured the loss because you sold at the bottom. Maybe it's not the bottom. Maybe there's more downside to go. But if you panic and sell right now, and then 6 months, a year, whenever the market goes back up, one, you sold at the bottom or you sold after the market drop, which you shouldn't do, right? You should have went to a cash position a long time ago. And I'm saying what I think is best for myself. I'm not saying that you should have did that, right? I'm not giving advice. But when you saw the writing on the wall, when you saw Warren Buffett out there going to a record cash position like he's done before every other economic downturn, I mean, this is simple, folks. This is like almost middle school type of stuff to kind of sit back and figure out what's going to happen and what to do. All right. But again, if I was someone that saw my stock portfolio drop by these amounts, 10, 15, 20%, depending on how you're allocated, maybe more, I wouldn't panic. Right? I'm not saying you should do this. I would just say that I wouldn't panic. I would just sit and wait. And if you have cash to invest, look for a good time to dip in. Don't go all in. But if you have a cash on the side, a set amount, maybe put in 10, 15% in the next few days. If things start to level off and calm down, maybe go bigger, maybe 25, maybe 35%, maybe 40%. And if you're someone that feels like this is not going to be, there's not going to be any recovery, Maybe some of you are on this channel. I don't know. Maybe let me know down in the comments. There's people out there thinking that this whole system at some point has to implode. But guess what? It never does it? It never completely implodes. It always recovers and goes on to new all-time highs. Let's go again to a longer-term chart here. Dow Jones. Every market downturn has went on to see new all-time highs. Every market downturn. Look, financial crisis, you had to wait from the peak, which was May or so 2008, the bottom, February 20th, 2009. Less than a year, you saw the bottom. Then you started to see recovery. So to get back to where the peak was in 2008, you had to wait all the way back until 2012, folks. That was a 2-year recovery in the Dow Jones. Now, other indices a little bit different, but you get the point here. So anywhere from 6 months to 2 years, typically, worst case scenario, 2 years to get your money back. This drop here is much steeper than the financial crisis. Look all the way to the right side of the chart here. It's similar to the 2020 sell-off with the introduction of the health crisis, right? We're getting there, right? So we saw, 29,300 peak and 21,000. We shaved off 8,000 on the Dow Jones health crisis level. And what are we seeing here recently? Well, let's see. Look at a chart here. Went from 44,500 down to 37,000. We've already shaved off about 7,000. But remember, we were much higher. We were much more over leveraged this time than we were back in 2020 and especially back in 2008. When you look back at 2008 now, that doesn't even look like a bubble because it's so tame compared to what we've seen as far as the run-ups in the past, just in the past few years. Point is, folks, bottom line is, don't panic. If you are someone that didn't see the writing on the wall, you lost a lot of money. Again, you're risking selling at the bottom if you sell right now. And then there's the people out there that say this is not the bottom. It's going to go down for years and years. This is the end. This is the ultimate collapse. And if it is, that's why I say don't go all in, right? I'm not saying it is, but if it is, if it were to be that, if we saw more system destroying things unfold here, which some people are saying that's going to happen. They're saying the tariffs are just the beginning. This is going to be the beginning of the ultimate meltdown. If that is the case, you're not going all in anyway. So if the market drops 30%, you dip in 10, 20% of your cash. It drops another 10%, you drop in another 10, 20% of your cash. You're not going all in. Even when you think the bottom's in, you're not going all in. All right, and I know a lot of you out there are saying, JJ, I'm not in the markets anyway. I'm just sitting back and watching with the popcorn, right? This is very entertaining. All right, but let's say some of the headlines. Let's take a look at some of the headlines. What some people in the investment community are saying out here today. All right, let's see. We've got Bill Ackman out there warning the world is on the brink of a self-induced economic nuclear winter, folks. You thought I was a fearmonger. A nuclear winter. What does that even mean? Well, it sounds very devastating, but I don't think he's talking about actual nuclear nukes. He says, this is Bill Ackman, investor, we could have went back and basically rolled back these tariffs and called off basically what he's calling an unfair tariff system. And again, he's calling this a self-induced economic winter. And people should start hunkering down now is what he's saying. The country is 100% behind fixing these global problems, but business is a confidence game, and people have lost their confidence. These elevated tariffs have thrown geopolitical turmoil across the globe. And yes, I would disagree with what he's saying there. I don't think it has. I think the investment community is selling off right now to, one, send a statement. And remember, the top 10% own most of the stocks. It's over 90% of the stocks that are owned by a small group of people. So they're the ones selling right now. In other words, they're the ones going to cash. They're not losing money. They're selling. The ones that sold went to cash. They're not losing any more money for the stocks they sold anyway. The ones that didn't sell, the ones passive investors, 401k, people sitting idly in their 401k account. If they're in stocks, they're the ones losing money, right? The idle investors, not the active investors. So that's what you have to think about here. Are you someone that's just going to sit back and let the wind blow you wherever you go and just not take any action? Or have you already braced for this? Like I think most of us here, again, have braced for this. And now is the time when you can make good money. Now is going to be a great wealth building opportunity, just like it's always been if you've been paying attention. All right, but let me bring it back again here because I want to urge caution out there to people that are panicking right now. If you've seen a big drop in your portfolio, a drop in your wealth and your investments, and you sell now, ask yourself, will you be part of the buy high, sell low club, right? You don't want to buy high, sell low. You want to do the opposite. You want to buy low and sell high, right? So, but if you've already suffered the losses, suffered the drop, ask yourself, do you think the market's never going to recover? Is it really different this time? Is it really a nuclear winter? Is it really the end of all, the be all end all? I don't think so, folks. I think this is going to boil over. This is going to, we're going to see calmness after this, right? Could be a bumpy ride, though, for a while. Again, looking back, there's been recoveries in a matter of weeks. There's been recoveries taking years and years and years. So factoring in the worst case scenario, let's say it takes years and years to recover. When you go and buy this dip, don't go all in. That's what I'm going to do. That's what I would do. And that's what I plan on doing. I'm not going to go all in, right? If you have 10,000 to invest, maybe put in 3 to 4 to 5,000, right? That way, if you don't see a recovery for years, you still have some cash to get by on. You know what I'm saying? You don't want to go all in this situation. Anyways, that's just my kind of 2 cents on what the market's doing today. But let's go ahead and get into some news here. Economic, financial, economic reality, as we call it. All right, folks, we're going to jump on over to the Manheim Used Vehicle Index. We've seen price levels pretty much level out over the past 9 months now, right? It was dropping. We saw some seasonal upticks, but vehicle prices actually have leveled off the used vehicle index, right? A lot of people out there predicted a decline, a drop. Again, as long as banks can loan out money and not have to worry about defaults, because even if everybody defaults, the banks can still get just money injected into them to keep them operational. So we know the too big to fail banking system is still operational right now, right? That hasn't changed. Could it change? It's possible, but I wouldn't sit there and be afraid that the banks are going to collapse. Right? You still have to look for investment opportunities. But something else I wanted to point out, and again, we said this was going to happen. This is what has been made clear by this current administration. The current administration calling on the Fed to lower interest rates. Right on time, folks. So obviously, they want to reinflate the bubbles. They don't want the housing bubble to go bust. They don't want the car market to crash. They don't want prices to come down. What is coming down is oil. We're seeing a sell-off in oil right now, and that could be good news for the price at the pump. Crude oil now down under $61, folks. And that's the lowest it's been, I believe, in about 5 years. Let's go out to a chart here. Yeah, $61. You have to go all the way back to February 2021. So we're more than a 5-year low on the price of oil. So very interesting. When you see deflation, you also see some things become more affordable. And how low will it go? Well, let's take a look at an all-time chart here. In 2020, we saw it dip down to basically negative. Remember, that was what was trading was negative. But could you go buy oil or get gas for zero or negative? Of course not. But that's what it was on the paper markets. Remember, the paper markets are manipulated. It's just digits on a screen. For example, they can click a button right now and they can shave off 50% of the stock markets right now. Of course, they're not going to do that because that would be just too ridiculous and people would be blown away and they would wake up to realize how manipulated everything is. So they're never going to do that. But that's what's possible and that's what could happen. Is it going to happen? No, because they don't want people to be completely freaked out and exit the stock market forever. All right, but let me wrap it up here with some words of caution here. I don't want to make this sound like it's a no-brainer, like you're just going to buy the dip and everything's going to be fine. It's going to go back to new all-time highs, folks. There's still a lot of risks out there, and that's why I said here repeatedly, numerous times on this report today, that I wouldn't go all in. Even if you think the bottom's in, I wouldn't go all in. There's way too many risks out there. How can I put this? We have a lot of things happening in our world that need to be resolved. They need to be uncovered or unveiled, if you will. And it's a lot of bad actors out there. And if some of this stuff starts coming to light, that's when you're going to see the real panic start to hit. And right, there's been people saying that these things were going to come out years ago. The way the banking system works, the way it's rigged against the middle class person, the working person. And there's people saying that a lot of these things need to be ended. A lot of these agencies need to be ended. And some of them are being cut right now. We just had a whole bunch of new announcements of more cuts today to federal agencies. So where does this end up, right? To me, if it were me thinking about getting back into this, I would sit back and wait a while longer because there's a lot of things that still need to be revealed, a lot of cards that need to be put on the table, a lot of things need to unfold here, and we could just be seeing the tip of the iceberg, folks, because the bigger this bubble got, the cost of living along with it, the riskier it became. And now the unfolding or the unwinding of this could be much more severe than we've ever seen in any of these previous market downturns, right? Again, nobody knows exactly how it's going to play out. But if it were me, I would kind of sit back and take a more cautionary approach before thinking about jumping into these markets. All right, again, not permanently. I'm not saying this is the end of the world, but just sit back a little while longer to see what else is going to come out of this, what else is going to unfold. There's a lot of dominoes that are in line with just the markets, right? The markets could bring down a lot of other things along with them, all right? Jobs, companies could start laying off more when these CEOs see their portfolio shaved by 25, 35, 45, 50%, do you think they're not going to panic and start looking at cost cutting even more and start laying off more people, right? And maybe there were some CEOs that saw this coming like we did here and they didn't lose a penny. They went to cash and they're not losing a penny, but I don't think so. I think most CEOs are just taking their stock buybacks and they're just accumulating stocks. I don't think they're really actively trading. Maybe some of them are, but for the most part, I don't think they are. I think a lot of people, a lot of the big money people, I think they took a big loss in this latest drop. But same thing, will they panic and will they sell at the bottom, right? And then watch a few months later and markets are going to recover, right? We don't know, but we know that just be calm and don't panic. That's the thing I wanted to mention here. Don't panic. And we've already began to see a few things backfire that were, I think, unintended, right? We see U.S. companies, car manufacturers laying off people because the tariffs and the parts that we get from overseas, even though the manufacturing plants are here in the U.S., a lot of the components, a lot of the parts are imported, and those have tariffs on them. So even if companies come back, a lot of the things they're going to import are still coming from other countries, and we have global tariffs happening right now. No country is spared. There's even some uninhabited islands that we had tariffs put on them, folks. So I think it's going to get still a lot worse before it gets better. I think we're just at the beginning, folks. And I don't think anybody knows exactly how prolonged this could be, but I would just, urge caution here and don't panic, be calm, be rational, use a little logic, look back at history, see what's happening in history. But again, history doesn't necessarily forecast what's going to happen this time because things are a lot more bubblicious this time, if you will. Prices are much higher. Things are more over leveraged. We've got 1 and 2 businesses are propped up on debt right now and issuing bonds and basically living off of debt right now. So what could happen in the commercial world, and could the commercial vacancies become a lot worse if we see a lot of businesses start to go under, right? So brace for all this stuff, folks. It's going to be interesting. It's going to be fun to watch here. All right, but let's wrap it up here with a little housing market news, folks. Again, some of these bubbles are so big, they need to go bust. This housing bubble is insane, folks. Got a chart here out of Consumer Affairs. This is the number of work days required to afford just the median priced home and the mortgage payment on that home. Sorry, my screen keeps glitching here. In California, you basically have to work half the month. This is out of the month, how many days you have to work to afford the median price home. California, you're working half the month, folks, 15 days. And surprisingly, it's the same up in Montana because the incomes are lower there. What they're doing is they're taking the incomes versus the median home price. Obviously, if you've sold a home in California and moved to one of these lower price states, you might have your home paid off. So you're not working anything except maybe the upkeep and property taxes. But just looking at the mortgage payment, 15 days in California, 14 days, looks like Utah. Some of the other higher price ones there. Of course, we got New York up here. Idaho, surprisingly, 14 days out of the month. The lowest price states, though, here we go to the Rust Belt here, folks. We've got Ohio, Indiana, Illinois, Michigan, in these middle of the country states over here. We got Nebraska in there. Some folks 8 days out of the month in Iowa. There's Nebraska up there, rather. Anyways, you get the point. Hope these bubbles needed to burst. Will this be the bursting of the bubble? Nobody knows. Let me know what you think down in comments. And what's your opportunity? What's your forecast? Is this an area of opportunity, or is this the end of the end? Is this we're done? We're never going to recover from this. Let me know down in the comments, folks. Everybody, keep stacking. Bye for now. Stay calm. Peace.